Good afternoon. Time to check in on the markets picture. We had a bit of a mixed performance, and this is on the back of the hotter than expected U.S. inflation data, as well as the mixed commentary that was coming out of the central banks following that hot data print. Hong Kong shares were the ones that led the losses in that particular side of the world. However, when we look at what was happening from a local perspective, we did get a SENS announcement out of Anglo American Platinum, that CEO Natasha Fulyoon will be stepping down. This is after 3 years at the helm of the company. She will be joining a US-based mining company called Newmont Corporation. She'll be joining as COO. And of course, she has given the company up to 12 months in order to facilitate that handover process. Another company news that came out, we had Nedbank saying that David Mnele will be taking over as chairman from June. As you remember, he was the Deputy Reserve Bank governor, serving 2 5-year terms, and also was at Alexander Forbes, is still at Alexander Forbes. But from May, he will be joining as non-executive director, and then from June, will be taking over the chairman role. Now, to talk to us about the market and also just to look back on that CPI print, we are joined by, of course, Chantal Marks, who is from F&B Wealth and Investment. Chantal, thank you so much for your time. So let's, key takeaways for you, especially when you look at that CPI print.
Well, I think the major takeaway was that it was higher than expected, and that that deflationary trajectory that the Fed has been looking at saw a bit of a wobble come through in January, or in February rather. No, sorry, January. January generally has been an interesting month from a data perspective in the US. We also had a really hot jobs number, indicating that the employment situation in the US has been more robust than what was expected. But there are a few statistical funnies in the January data. I don't necessarily think that this is the reason why the CPI print came in hot. I think what we need to look at right now is what it looks like on something like a rolling 3-month basis or a rolling 6-month basis. And it does seem as if inflation is still coming down. I think the worry right now is that that number is sticky, and it could mean that the Fed will have to take more action, and perhaps more action than what was anticipated to this release.
On the back of what you've just said, Ned, do you then get a sense that the market is eventually backing down from that game of chicken that it was playing with the Fed in terms of what the Fed is saying and what the market believes the Fed will do?
So for now, I don't necessarily think that. I mean, if you looked at market movements last night, we did have the S&P and the Dow close lower, but the NASDAQ actually closed higher. I think it was a combination of markets perhaps trying to look through this number specifically, and earnings numbers yesterday actually coming in a little bit better than expected. If we were going to take what the Fed is saying at face value, the market really shouldn't be as strong as it is. And the pullback should be more severe when inflation comes in a little bit hot, like what we saw yesterday. But yeah, I mean, I think it's very difficult for market participants to fully digest what is happening right now, particularly in light of that very good US jobs print that we saw, and perhaps we've come to a place where we're now at a bit more of a pause. So that initial optimism that we saw at the start of the year perhaps fading a little bit, but it seems to me as if the market is looking for reasons to go up, when instead I think the market should be looking for reasons to go down, especially as we get to a place where we are unsure whether or not that US economy will actually go into recession this year.
So let's bring things locally. Yesterday, Telkom announcing in the afternoon that it's going to be retrenching 15% of its staff. Let's look back on this particular company in terms of the problems that Telkom has experienced, at least over the past few years.
So I think Telkom you always need to look back to the past for Telkom. And I'm actually so happy that we are talking about this today. Telkom 30 years ago was a fixed line operator, and that with the advent of mobile into South Africa, the kind of rollout of internet and broadband, you really saw fixed line come under a lot of pressure. So what Telkom had to do is they had to manage their business together with trying to manage an orderly decline of the biggest part of their business. They've set up a pretty solid mobile operation, and they are kind of market leaders when it comes to broadband and fiber rollout. It's just a matter now of finding that balance and making sure that the existing fixed line customer base is still being serviced while they actually make that business a lot smaller, and at the same time growing the new lines of business. Telkom is also a very complicated business, and I think that one of the issues that they've faced is that it's very difficult to actually value the company. So management has been trying to kind of perhaps chunk the business into different entities. I know OpenServe is now being reported on separately. SwiftNet is being reported on separately in order for investors to have a better idea of how to value the company. Still, it is very big. And it is very complicated, and that is going to continue to be an issue, but they are trying to fix that, and a combination of reducing costs, which unfortunately leads to job losses, and looking for buyers to perhaps signal to the market better what the value of those underlying businesses is, hopefully we'll be able to solve some of those issues.
Well, Chantal, I would have loved to talk to you about building materials retailer Cashbuild as well. And I think one thing that we are getting from their trading update is that consumers are still in a constrained environment, and this company is continuing to struggle, especially in that home improvement side, following the boom that we saw in the COVID-19 pandemic. But unfortunately, we're going to have to leave it there. That is Chantal Marx, who is from F&B Wealth and Investment. And we will be looking at some other commentary coming out, especially as the week unfolds, coming out of the US Fed presidents, just to get a sense in terms of where are they seeing interest rates going, at least in the short to medium term. But that is it from me. We're going to take a quick break. When we come back, we'll have more news for you, so stay tuned.